Welcome back to the channel, YouTube. My name is Cameron and welcome back to Invest in Yourself. Today we're going to be looking at Workhorse technology and my recent share purchase of this C-Class series electric delivery van maker. So we'll be covering two topics in this video overall. First, why did I buy Workhorse, and cover some of the recent most events that have taken place that has changed my perspective of this company overall. Second, will I buy more and what my intentions are on this investment overall in the public account. Please pop a like, share the video, or maybe subscribe and let me know down in the comments what you think of covering some of these EV companies overall. I'll probably do a couple more since I do own some investments in these new SPACs and these new EV startup companies. So let me know what you think, and thank you again for coming to watching, and let's get into it. What I didn't realize though, YouTube, that Workhorse doesn't really directly compete with either Nikola or Tesla. It's all about their delivery vans, and the company just started delivery its C-Class series electric vehicle vans to customers. But Workhorse has been working on vehicles for years. If you're not tracking, YouTube, they've already driven 5 million miles, and Workhorse is the leading platform for miles driven perspective for last mile EV. And just to cover just some of these short things with the electric vehicles makes a lot of sense in these commercial applications, with a lot of stop and start driving, and vehicles can be recharged in a central location at night. What's more, when commercial vehicles are driven more than like personal cars, the energy savings can pile up quickly. Electricity charging the batteries typically cost less than the equivalent amount of the gasoline overall. EV adoption by these commercial fleet operators, there's several catalysts, YouTube, that could help the stock overall in the near term. Workhorse is bidding on this USPS business to replace some of its vehicles that with the right-hand drive mail delivery trucks. The company also owns a stake in the Lordstown Motor, which will be publicly traded by merging with a SPAC with Diamond Peak Holding Corporation. Lordstown is basically launching a light-duty pickup truck called the Endurance, and that's a good thing for Workhorse since the terms of the deal would dramatically increase the value of the company Lordstown shares. So Workhorse also is entitled to 1% fee of any debt or equity raised to fund Lordstown and get royalty on each truck Lordstown sells. This is one of the main reasons, YouTube, that I kind of got in this stock after seeing Cathie Wood and the ARK ETF started making this into at least a 2% position into their robotics and autonomous driving ETF. And as soon as I saw that they got above that right at that 2% threshold, and they started dollar cost averaging into Workhorse, I went ahead and started opening up a speculative position in my portfolio. I believe ARK sees just like what all of us in YouTube see with Workhorse and how innovative and disruptive they're going to be with their last mile delivery services overall. And I think this is going to be a long-term company when it comes to in the future disrupting the whole delivery system. Workhorse announced a partnership with Hitachi on Monday, boosting the shares by double-digit percentages both Monday and Tuesday. Hitachi's advice will benefit Workhorse in scaling up its creation of the electric vehicles. Hitachi will also use this Lambada platform to help accelerate the company's production expansion efforts. To go along with this Workhorse Group news, Hitachi Capital America will also be working with the EV company. This will have helping effect when creation of a dealership network across the U.S. to help it better deliver its EVs to dealers and customers. There's a lot of hype right now, YouTube, around EV makers right now, but thanks to its Lordstown stake, Workhorse is particularly intriguing because it offers exposures to two potential winners when it comes to the EV market as it is right now and the Lordstown stake. But we do have to understand, YouTube, at the end of the day, Workhorse, us investors are paying a significant premium for potential growth. In its second quarter results, released August 10th for the period ending June 30th, Workhorse generated sales just around less than 100,000 and reporting a loss upward of $130 million. This is why I'm holding this company as a speculative stock play for the portfolio and not overextending in the company in the event of a pull down due to not being selected for the USPS contract. But long-term aspect of this company is endless overall when it comes to the last mile driven delivery system programs. So YouTube, will I buy more? And my intentions overall. With the company still in startup mode and current earnings shouldn't be a big deal, yet that didn't stop Workhorse stock from selling off after its quarterly release a couple months ago. With losses for a period higher than expected, should investors be concerned? Probably not. It's the likelihood of potential needle movers in the motion that should be on top of the mind. namely whether the company can beat odds and win this multi-billion dollar deal with USPS. Few highlights are pertinent for investors at this time. Workhorse finally started production of its C-Series electric step vans as a part of its contract with Ryder System. And additionally, the company has also reaffirmed delivery targets of producing 300 and 400 vehicles in 2020. Cash availability, and that's one thing I'm a big firm in some of these. If I'm going to go into a speculative play, I wanted to make sure they have a decent cash to debt ratio, and after exercising issues in stock warrants and options, the company raised $70 billion in financing, and as a result, the company has $105 million in its cash till, which it's a 300% plus higher than it was in 2019. Overall, YouTube, I have a couple scenarios that I will do with Workhorse pending the USPS contract. If they win a partial or full contract with USPS, I'll take out the money I initially invested to the company and let it rest on the rest of the shares as a long-term investment overall. And the other hand, if the contract fails through, I'll keep the rest of the shares long-term and I'll buy in as the company goes to lower prices and hold long-term 3 to 10 years. Overall, just remember, this is definitely a speculative play for myself as an initial investment. One thing we have to take in consideration, out of the 100% of people invested in this company, share stockholders, everything across the board, this company is 20% shorted by funds, individual investors. So there's you figure 1/5 of the people who are in the company believe this company is going to go downward at current prices as we speak. But again, I fully believe that you have to have some money in the game with this company due to the Ryder deal and the company's stake in the EV startup Lordstown Motor. I'm not into the company for the short-term gains, but I will get my initial investment out of this play if the situation presents itself in the short term. So I will buy more. I'm pretty comfortable where I'm at today with a little over than more than 100 shares, but if the company falls back into the $15, $16 range before or after the contract announcement, I will add more, but just a speculative account investment only in the public account. Let me know how you think about this video again, YouTube, and thank you so much for coming watching the video on Workhorse. Remember, always invest in yourself.